Guys, so welcome back. This is the part two of the video I made earlier about mistakes that I make. This is the second part, which is the question and answer part. I should have recorded this yesterday and also drop it as well, but I was very tired after recording the first part actually, and today I went to church. I'm back from church and I'm so tired already. Well, I just want to make sure I record this video and drop it today. So please ignore my tired face. So the first question we have here is from Dro. He said, "How do you identify a supply or demand zone?" So to identify them is very easy. It's not something that is a big deal. Supply zones, they are usually found at the upper part of the chart, and while demand are found at the lower part of the chart. And first, I want to say supply zones, they are zones or price level traders and investors want to initiate sell orders from. And strong supply zones, they are characterized by big impulsive momentum candles. Like for the supply zones, you see down candles, sell candles that are big, huge ones. So there are strong supply zones. Not all supply zones are that strong. You'll find strong um supply zones on the higher time frame. Okay, anything from the 4 hours, daily time frame, you'll see strong supply zones. And aside from the huge momentum candles, they are characterized with imbalance or fair value gap (FVG). So this fair value gap is a gap that is being created when those candles are dropping. Price was not efficient at that time; it just dropped. Okay, so that's how you identify a supply zone, and the same thing for demand zone. You see big, huge up candles, buy candles that also has imbalances. And the major thing about these zones is that they will cause, for it to be a valid zone, they are going to cause a break of structure. So for a supply zone, for you to identify a supply zone will cause a break of structure to the downside. Okay, so this structure that is breaking to the left side, it's always a structure that gave rise to that supply zone. Okay, the low that gave rise to that supply zone that you are marking out. So this supply zone now will come back later for it to be valid to break the low that gave rise to the high. I think you are getting me. So that is a supply zone. Same for demand zone. This demand zone will cause a break of structure to the upside. Okay, breaking above the previous high that led to the low that created that demand. So the demand level is valid once it breaks above that high that gave rise to the demand zone. Okay, so maybe I will go to the chart and show you these zones. So that's how to, I hope that answers the question that how do I identify. So once you see this, you know this is a supply zone, and supply zones, the houses bearish order blocks. So some people call those supply zones order block, a bearish order block. Why the demand zone? Some people will say it's a bullish order block. So if you see supply zone, demand zone, it's same like when you say order blocks. Okay, so don't get yourself confused. Moving on to the next one. Steals from Draw. He said, what time frame is best suited for supply and demand identification for intraday trading or swing trading? To answer that question, for me, if you've watched my video over time, I've talked about it several times. I do not trade on only one time frame. I always go from time frame to time frame. My time frames are anything from the daily to 4 hours to 1 hour, 30 minutes, 15 minutes, 5 minutes. I'm always checking these time frames. Why am I checking these time frames? I'm checking all of these time frames because I want to have the best possible point of interest. That is, I want to identify the best supply zone or the demand zone. That's why I move from this time frame to this time frame. But not every time I go on all of the time frames that I mentioned just now. Like for example now, at the beginning of last week, the last trading week we had, I was um I was there's this particular 4 hours time frame on GBP USD that I wanted to take a buy trade from. Okay. So this made me go on 4 hours time frame to be able to identify that zone. That zone also is very clear on the daily time frame too. Okay. So now for intraday trade, coming into Monday, Tuesday, Wednesday now, since price has gotten into that zone, now I want to go on the lower time frame, anything from the 30 minutes, 15 minutes, and 5 minutes now, to be able to now identify like internal supply and demand zones. These are now small, small supply zones and demand zone. Remember, we've tapped into the 4 hours, the higher time frame supply and demand zone on GBP USD. So now, when you go to a lower time frame inside a big demand zone or a big supply zone, market will create other mini supply zones and demand zones. So it's from those mini supply zones and demand zones that I now take my intraday trades from. Sometimes, not every time. Yes, most times, let me say most times, not sometimes, it's now from those lower time frame supply and demand I take my intraday trade from. Okay. Whereas if you are a swing trader, like you said, if you are swing trading, all you need to do is just identify the higher time frame supply zones and demand zones, which are very strong. They are more stronger than the lower time frame ones. So I identified you as a swing trader, you should identify those higher time frame zones, be it 4 hours, 1 hour, or daily, and you can take your trade off those big time frames. Okay. So the third question is, so that answered the question, best time frame. There's no particular best, because then also on the lower time frames I get to refine my entry. For example, now if I'm picking a demand zone on a 30 minutes time frame, you can realize that if you move down to like the 5 minutes time frame, if your entry point and your stop loss is about 20 pips, you realize that if you go down to like 5 minutes time frame or even the 10 minutes time frame, instead of having 20 pips as stop loss from your entry, you might discover that it can be refined to a 15 pips or 10 pips stop loss. So that will be able you'll be able to have a higher lot size to use. Okay. So that will reduce your risk. So someone trading with a 20 pips stop loss and you with a 10 pips stop loss, because you are able to refine, so you'll be able to use a bigger lot while still putting in consideration your risk to reward. Okay. So now, let's move on to the third question. He said, how do you identify liquidity? Okay, so draw, if you are yet to watch my video on liquidity, please go and do so. I have a video, and a very extensive one at that, on how I'm able to identify liquidity in the chart. Most time, liquidity are like double double eyes in the market. Like we have maybe 2 points, like resistance. For those that trade support and resistance, we have this resistance point where we have um 2 points in the market, where market is probably for a sell trade. Now we have maybe 2 points of resistance or 3 points where price has been coming, a price level that price has been coming to several times. Okay. So as at that time that price is coming to those levels, price is forming liquidity at those levels. Okay. So that is how I'm able to identify liquidity. I'm able to cite that this is a liquidity, and most times liquidity zones we have um liquidity zones we have probably supply zones or demand zones below and above it. Okay. So for example, now liquidity at the higher part of the chart, we have unmitigated supply zones or imbalances. So with that, you're able to know that our market is forming liquidity. I think I will have to go to my chart so that this explanation will be more better, so that I can show you examples on the chart. Okay. So I'm recording my screen now. Um so now, for example, like I was saying, this level right here, you can see this GBP USD trade now. This is this level now. This is liquidity right here. Okay. All of this top right here is liquidity point. Price has been coming back several times to hit this price level at this level right here. Okay, so with this I'm able to know that this is liquidity. Price will definitely come back later to grab this. And also, if you go down to the 15 minutes on this particular time frame, you realize that on the 15 minutes time frame, price has this supply zone just above all of this liquidity. Okay, and there's imbalance, little imbalance there as well. So with this I'm able to cite, oh, this is liquidity in the market will definitely come back later on to grab all of this zone, this up parts that price has been coming to multiple times. Okay, and just as we have right here as well, the lower part of this place is also a liquidity zone. Okay, where is my replay to now? So before price came down all the way here, price came to grab all the liquidity that was sitting at this lower part right here as well. So liquidity was grabbed at this point in time. Also, the Asian range concept. Each time we have the Asian session, we will build the high of the Asian session, and we will also build the low of the Asian session. That's why I have this particular box right there. I did not put this box by myself. It was from this indicator that you see right here, this Q zones indicator. If I turn it off, you can see it's gone. So me turning it on now, I'm able to see the Asian range high and the Asian range low. Okay, so always note that the Asian range, they are liquidity zones. This up part is a liquidity zone, this down part is a liquidity zone, and price will now use the London session and the New York session to take out the liquidity sitting at the top and down. So you can see right here, during this London session, market pushed up, clearing out the liquidity at this place. And you can see the liquidity right here is, we have two price coming first time, it comes down, came back second time, came down again, came down third time. So at this level right here, some people may be selling thinking, oh, price is hitting this point several times. Okay, so that is a liquidity zone, and below it also is liquidity zone. If we push our chart to the front, you can see that later on price went up and also came back later to grab the liquidity below this. So these are just how to identify liquidity. Also right here, you can see multiple times price was hitting the zone several times. That is to tell you that, oh, market is building series of resistance, one time, two times, three times, four, five, six, seven, multiple times. So you just know right there that that is a liquidity zone. And if you look above it, what do you see? You can see that we have this supply zone just right at the top of it, and you can see that price came later after grabbing all of this liquidity to mitigate this supply zone properly. Okay, same thing at the bottom here. So these are liquidity zones and how to cite them. So the other time before I opened my chart, I talked about identifying supply and demand zone. How do I identify? This is how to identify it. This is a clear demand zone right now. How am I able to just know that it is a demand zone? I'm able to know because, just like I explained the other time, it has a down candle, then a big momentum buy candle, and this big momentum buy candle has imbalance right here. There's no other presence of down candles, of sell candles, it's just purely big buy candle. Okay, and not just that, e broke structure. You can see price broke above this previous high that gave us, that created this demand level. This was the previous highs that gave us this demand level. So now the demand level now broke the high that gave us the demand. So that is how you know there is a valid zone, and price will definitely come back to it later on. It might take a week, a month, a year, 4 years, we don't know. But price will definitely come back to it and mitigate it. Right now, what happened? So I don't know what happened. Okay, sorry about that. So now on this chart now, if you just ask me, Where how can I should identify a supply zone. I'll tell you, this is a clear supply zone right here. This right here now is a clear supply zone. How am I able to know that it's a supply zone? I'm able to know because now I can see the presence of a huge momentum candle. Not just that, I can also see the presence of a last up candle, a buy candle, followed by this big push, followed by massive imbalances. There are no buy candles within this candle right here. It's just a big drop of a sell candle. So this is how I'm able to identify that, oh, this is a supply zone. Now, for me to now know, is this zone valid or not? Yes, it's valid because now it broke below the low. This is the low that gave rise to this supply zone. It was this low that gave rise to it, and now this zone has broken it. So that's how I'm able to know that it is a valid supply zone. So this is how you identify valid supply and valid demand zone. Also right here, this now is a demand zone as well. How am I able to know it's a demand zone? It has big candles, there is imbalance, and it also broke structure to the upside. And now price came back to the zone. So this is how to just identify them. So you find out that this is a big demand zone. If you go to the 5 minutes time frame, inside there you will see meaning supply and demand. Okay, I don't want to stay too long on that question. Let me move on to the next question. Let me just shift this aside. So the next question is from David Ime. He said, how many pairs do you trade? Okay, how many pairs do I trade? Um, I would have loved to say I trade one pair, but let me just say I trade two pairs. I trade GBP USD is my main pair to trade, my go-to pair, and this year I added EU, Euro USD. I added EU. So those are the two pairs I trade actually, but most time you find me on the GBP USD more than you find me on EU. But this last week I think I traded more of EU, so I trade just two pairs. Also, Emmanuel said, "What are your trading hours?" Okay, so I trade during the London session and partly during the New York session. So I live in West Africa, and my trading hours is always between 7 a.m. But London session actually starts by 8 a.m. West African time to 4 p.m. West African time. And so around 1 p.m., the New York session will start. So the both sessions will interlap while London session is on. The New York session will come in around 1 p.m. So around 4 p.m. London session closes. Okay, so most time I'm always on my chart, like probably an hour before London session, or sometimes 8 a.m. West African time I'm on my chart. So those are my trading hours. So I trade between that 8 a.m. to like maybe 4 p.m. But most time I don't stay on the chart till then. I no longer sit for that long. So most time I always target the London session as opposed to trading the New York session. But there are times where my setup will not be triggered during the London session, and it might not be during the New York session that I'll be able to get into my trade. But I would have analyzed from the London session. Okay, so like on Friday now, I got on the chart during London session, but it was okay. During London session, there was sell on GBP USD, and I remember saying in my video that I do not want to sell. My main focus was for the buys as opposed to sell. So it was now during the New York session that my point of interest was tapped, and I was able to now get into my trade. So those are my trading hour, 8 a.m. If my trade is triggered during the London session, sometimes around 10 a.m., 11 a.m. West Africa time, I'm out of the trade. But if not, I might just stay till New York session around 1 p.m. to, but anything past 3 p.m., 4 p.m. when London closes, I'm out of the market. I no longer take trades. So I think that should answer your question, Emmanuel. Um, the next person said, "How many pairs do you trade?" Just like I said, GU and EU. Let's move on to the next question. Okay, this person, GB Bra, said, "How do you normally trade that supply and demand? Because I use 1 hour to plot out my demand or supply zone, it takes 2 days to get mitigated before I will look for entry. Please, if you can break it down, I've watched the video on YouTube, but I'm confused." Okay, okay. So, what this person is saying now is that he normally identify his demand zone and supply zone on the 1 hour time frame. Okay, and then it takes like 2 days before price will come to his entry. So we don't dictate to the market. Actually, you might have your point of interest marked out for a week before price will come there, actually. So you just have to be patient and allow price to come to your point of interest. But another thing is to note is the fact that are you taking zones that are you taking those zones off? How do I put it now? Okay, like for this zone now, hope you are not taking zones that are far away from price. Okay, at this particular point in time now, let's go back to this GU now. When I was able to identify this demand and looking forward for price to come to it, hope you are not looking at this demand level right here, because this is another valid demand level. So that's some of the mistake traders make. They go and take zones at the extreme part, very very extreme. So you need to be taking zones that are current, that are close to price action. Okay, so at this point in time when market was coming down at this area now, I was already looking forward to this zone. Okay, so that's what you want to be doing. And when price was pushing up at this level now, you should be able to be identifying this zone as your next demand zone. And presently now I'm able to identify this zone because price is currently here. It's not really far. It's not really far from this zone. So every day you need to go on the lower time frame. After identifying your bigger supply zone, you need to go on the lower time frame to look for mini zones, like the mini supply zones and mini demand zones, where you can take intraday trade so that you'll not be waiting for long. So now, for example, now at this particular point in time now, as I'm able to recognize this supply zone, that does not mean I'll fold my arms till price will come here. You have to, when market opens now, at this zone now, you need to look for other zones that you can probably trade a buy from and take price into this main zone that you are looking at. Okay, you just don't fold your arms and markets will keep moving just like that. So you need to find mini zones on the lower time frame. Sorry about that. So I hope that answers your question. Which time frame do you pick your supply and demand zone, and what time frame do you use for confirmation entry? I've talked about the time frame I looked for my demand and supply zones, higher time frame and the lower time frame. For confirmation entries, you get your confirmation entries on the lower time frame. Anything from 15 minutes, 10 minutes, or 5 minutes time frame, you definitely see confirmation, or 3 minutes. Just go to your lower time frame and you'll be able to get your confirmation entry. Like for example now, if maybe price pushes up to this zone, once price is in this zone, because you are now looking for probably a sell in the market, you need to now go on your lower time frame. Markets will start creating internal structures. Okay, so it's from that internal structure that you now be able to identify this is the first supply zone. Then you'll be able to identify a mini supply zone that you can now take a confirmation entry from. I also have a video on confirmation entries, how to get confirmation entries. You can check out my videos. You definitely see it and you have a clearer picture. So this is 4 hours time frame supply. Inside this place, if price should come here, you'll be able to have a 5 minutes confirmation entry zone price will break structure, internal structures, and you'll be able to get your confirmation entry always on the lower time frame. You get confirmation entries on the lower time frame. So the next question is what from David Email again. What's your risk to reward on a particular trade, and how many trade do you take per day? Okay. So my risk to reward is actually anything from 1 to 3 RR to 1 to 5, because take intraday setup. I don't swing trade. I only do day trading. One day I'm in and out. If at all I stay too long in a trade, that means I will just go um a day and the following day. But most times I'm usually not in the trade on the following day. On the following day I'm coming back to look for new trades actually. So um that's it about, I mean, okay. So my risk to reward, because I day trade, is always 1 to 3, because I'm also targeting areas of I'm targeting areas of maybe previous low. For example, if I took this sell from right here at this particular point where market was breaking this low, I will take my profit. Or if I'm in this buy right now, I might look to take my profits at this imbalance level. So because of that, my risk to reward is usually around 1 to 3, or highest 1 to 5 most times. But if you are swing trading, you definitely be getting risk to reward of probably 1 to 10 or thereabouts. Okay. So I always make sure trades I look for are actually 1 to 3 RR. Why I do that is because it's part of my risk management course, why I trade 1 to 3, anything above 1 to 3. Because if you are trading 1 to 3, if you are using 1% of your account, if you are risking 1% of your account per trade, that means if you lose one trade, you lose 1%. If you trade again and trade its stop loss, you've your account will be down by 2%. Okay. So but the next trade, if your next trade is profitable because you trade anything above 3 RR, you'll be able to, with that 3 RR now, you'll be able to recover the first loss, you'll be able to recover the second loss, the and you will now have profit. You still be left with profit even after losing your first two trades. So that third RR will be able to cover for the previous two and allow you to make profit. So if you don't understand that, let me break it down. For example, now maybe you have a $1,000 account, and on each trade you risk $100 on each trade. So first trade, hit stop loss, your $100 is gone. Second trade, hit stop loss again, another $100 gone. You are left with how much in your trading account? You are left with $800 in your trading account. Now, if you take another trade, risking the same percentage and risking the same percentage, that particular trade, and you allow it to run for at least 3 RR, on that particular trade, let's say you make $300 on that particular trade. That $300 now has returned the first 100, returned the second 100, and you still be left with a new profit. Okay, so that's why you need to take trades that are up to 3 RR, because of losses, so that you'll be able to recover your losses faster. And how many trade do you take per day? So most time, because I do not trade a lot of pairs, I only concentrate on GU most times. So in a day, I take sometimes one trade in a day. And when I take two trades, it will be that maybe I saw a good opportunity on GU and I also saw a good opportunity on EU. So I will get into those two trades. So most time, just 1 or 2 trades per day. And if my trade hits stop loss, probably during London session, I get into a trade and the trade hits stop loss, I'll just re analyze my chart, see what is going on, see probably my bias was wrong, and reanalyze the chart from the beginning again. If I'm able to get a new entry, or if I'm able to have a better understanding of what price action is doing at that particular point, I will definitely try to get into another trade. But if I do not see a clear bias, if I don't know what is going on chart, or we are starting to have consolidation, or market is just moving funny, I just close for the day. It's not compulsory to trade every day. Okay, so um on to the next question. Says, do you take your profits based on the higher high or lower low on the time frame you are trading at? So I get asked this a lot of times, that do you take your entry on a particular time frame, or and take your profits? For me, I've said it several times. I don't trade a particular time frame. For me, I go from time frame to time frame. For example, now on this GU right here, there is a particular, as you can see now, at this zone now, we have this strong supply zone. But if I should go to the 10 minutes time frame, is it 10 minutes or 15 minutes time frame? I think 15 minutes. On the 15 minutes time frame, there's a particular zone that I am looking at for the past few days. Yeah. You can see there's this zone, a more refined zone that I'm looking at for the past few days, and I know price is going to come there. Okay. So now, but for the buy trade I took from here on this particular day, on Friday, this particular zone buy is from a 10 minutes time frame. So you can see how I incorporate different time frames into my trade. Now, this is a 10 minutes clear demand zone with imbalance. It's from this 10 minute zone I was able to take this buy trade. Okay. And now I'm looking forward that price is going to come into this 15 minutes point of interest. So you can see how I use different time frames. So it's not because I'm getting into the buy trade on a 10 minutes time frame, I need to get out on 10 minutes or thereabouts. If I don't see a clear zone on the 10 minutes time frame, I move to another zone, to another time frame, to look for a better or a clearer zone. And my even my take profits can even be from the 1 hour time frame. Okay, we have some people now that may have gotten into this buy trade on Friday, and they are swing traders, and they want to take their profits on this 1 hour supply zone or 4 hour supply zone. Okay, so it's saying, do you get into your trade on one particular zone, on one particular time frame, and get out on that time frame? For me, no. I just check the best suited time frame that gives me a very clear view. I always love to see a clear view. You can see my buy entry from the 10 minutes now. This is 1 hour time frame. The entry is not clear. We don't have a clear entry on this 1 hour right here. So that is why I will then go on another time frame to see if I can get a good entry. This is the 30 minutes time frame now. The 30 minutes is not even giving at all. You can see that this should be the demand level, but at the same time, I'm not seeing imbalances. I'm only seeing a mitigated zone right there. But that pushed me to go further into another time frame. Another time frame now, I'm now able to refine and get a better entry. So that is how you use your time frame. And please be careful of refining. Don't over refine. If you over refine, you'll miss trades. Okay. So I think I've answered that. Let me see the next question. Mm, I think that's all. I don't think we have any other further questions. So that will be all for the question and answer segments. If you have questions, maybe some other time I will record video again to do some explanations if people really drop comments. But with that, I hope this video was helpful, and till next time.